To welcome Holger, Jonathan, and David to talk about DeFi and the future of lending, P2P lending and decentralized credit. It's a panel discussion for Web3 Stronger Together Virtual Summit, Day 2. Welcome, guys. Thanks
Welcome.
again for joining. Bring your vision, your thoughts, your knowledge, and contributing to this Web3 Stronger Together initiative. Jonathan, could you introduce yourself and please let us know what you are doing and why are you involved in crypto decentralization, Web3?
Yes. First and foremost, thank you for having me. These webinars and these types of conferences where you have an entire global community together is incredibly important. And so I'm honored to participate and happy to be on such a dope panel. And also, more importantly, none of this is financial advice, none of this is legal advice, and none of this is investment advice. I think I speak for all my fellow panelists when I say if you do anything that we tell you to do or that you believe is our idea, go off and do it. You may be in trouble. And don't blame us.
Well done. It's important to clarify things again.
And I apologize for my appearance. I just flew back from London to Denver, and so it's been a long morning. But it's 4 a.m. here, or 4:30.
Thanks a lot
for
my
passion. Yeah, I'm happy to talk about my passion for this space and excited to see what's coming in the future. I know we're in a tough regulatory time. I've been in this industry since late 2016. It's been very, very volatile. I'm hoping that the next year or so we start kind of smoothing things out and we, as an industry, kind of come together and build solutions that actually build on the infrastructure that we need. And then that'll hopefully clear up a lot of the regulatory problems that we have. But my name is Jonathan Dunsmore. I own a law firm called Dunsmore Law. We deal with corporate securities. And I fell down the blockchain rabbit hole when people started asking about Howey opinions and ICOs and things like that. And so now we try to make sure people stay out of regulatory trouble, or if they are in that weird gray area, that we have hopefully a legal opinion that can cover them. But I'm very excited about this space. DeFi lending is arguably the most hot topic, I think, for the SEC coming up in the next year or so.
I'm really curious to get your point of view. Welcome, David.
Hi, everyone. Jonathan, I just flew back from Barcelona, Mobile World Congress in Barcelona. Not as long as you, but also very tired. But at the same time, really excited about this conference. I agree with everything Jonathan said. Not financial advice, not legal advice, but very excited to have this discussion on DeFi. I think it was one of the stars to come out of the sort of Web3 winter or crypto winter of 2021. Very exciting. It's shaking up lending. It's really disrupting the financial industry, and I'm excited to discuss that with the panelists today.
Thanks for joining. Holger, welcome.
Thank you very much. My name is Holger Fischer. I work at a public permissionless layer 1 blockchain called Concordium. And I've been working there for approximately a year. I've been in this industry for 4 years now. And I'm not going to be able to give any legal advice or any legal aspect or perspective or anything. I come from a very technical background with a master's in data science and machine learning. And currently I'm working on building a few lending protocols with some projects on Concordium, the smart contract composition that goes into that, how to facilitate P2P lending and decentralized credit. And we are also trying to wrap our head around the new regulation that is emerging, but that's a very difficult aspect. So I'm going to leave that to Jonathan to talk about.
So thanks for this introduction. I remember we not only talked to early adopter, the Web3 ecosystem. We really aim to contribute, to educate, learn, and it's no financial advice, guys. There is no emoticonness to rocket, and we are far away from being to the moon, boys. Let's talk about the today topic, DeFi and the future of lending. P2P lending, decentralized credit. Maybe we could start to explain what is the main difference between the current credit system and the P2P version, or the decentralized version. Who wants to start to share? Olga, you want? You can explain?
I mean, briefly, how we understand it here at Concordium, and is it's a type of lending where borrowers, retailers, can obtain loans directly from investors, right? So they don't need the traditional financial institutions acting as an intermediary. And most of this happens on decentralized lending protocols or lending platforms, and we use these or online marketplaces to connect borrowers with lenders, right? And it usually involves borrowers filling out an application, which is then reviewed by the P2P lending platform, and then if it's approved, the loan is listed on the platform, and investors can choose to fund it, right? And I think that would be a very high level description that's easy to understand for everyone about what exactly a P2P lending is about and what a lending protocol is.
Yeah, I think one of the things I'd add to that, Holger, though, is that you can do peer-to-peer lending without Web3. What makes DeFi different is two things. So blockchain, which is providing a level of trust and immutability, and smart contracts, right? And those smart contracts, are essentially automating lending. Blockchain is providing the trust for that lending, and when you put those two things together, you've got a very disruptive solution, which essentially democratizes banking, right? So you've got you've got yield farms, which essentially are about liquidity, and when you sort of look at that, anyone can get together and form part of that liquidity pool, to start lending and essentially become a bank. And it also, I would like to think, and I don't know, this maybe it's part of the discussion, that it's also going to democratize and make it more equal who can access financial services. Because after all, part of the vision for Web3 was to bank beyond banks, right? And to make financial services available. But I think just in short, the difference is peer-to-peer. I could go and give you $5 and lend it to you, but the difference here is the blockchain and the smart contract.
Okay.
Yeah.
Thanks a lot, Jonathan. In a legal point of view, what is can we consider it's risky? We have seen some lending protocol over under collateralized and so on, and we see also, let's say, not the best use case coming in this segment of the crypto market. Your legal point of view as a lawyer, as having to deal with the regulators, this is a reality.
Legal opinion.
No, one more time. It's just feedback.
This is just educational information, as we say. So, to echo what everybody else has said, there is, a question of what the decentralization of it is, right? If I am a bank, I am a very centralized entity. I work with the government. The government sometimes gives me money. In the United States, that's basically how your mortgages are created. And so there's a really special relationship with most banks and the government. And so that's either done through a centralized bank, or in the United States, we have this weird quasi-centralized, quasi-private, quasi-public thing called the Federal Reserve. And when we're looking at this type of new world, it basically arose from two problems of, hey, I've got tokens that no one will let me loan against, whether it's needing to pay a mortgage or needing to, I don't know, take someone out to dinner or buy a house, or all of these normal everyday life things. Nobody was doing that. No, we couldn't go into a normal bank and say, "Hey, here's my Bitcoin." They look, what was Bitcoin? I've heard of that. That crazy crypto drug money. Get the hell out of my bank. And so, that's where the need or one of the needs of DeFi arose, but also the liquidity issue. If I'm hodling and I'm, sitting on a good position and I want to go still play in the market, but nobody in the traditional world will give me the loan to go play or go back in the market, it creates this like negative incentive to be like, wait a second, we know there's an issue. We know there's more to be had. There's more liquidity. There's more access to the market that needs to be given by known participants, known traders. DeFi is not something that you just like stumble upon as your, 90-year-old aunt and it's like, oh, I'm going to go DeFi some shit. Like that doesn't happen. You got to know what you're doing. And so the world of DeFi, the farther we get from the centralized banking model, the better we are. As long as it's more code, as long as it's more, programmatically, the interest, the variables, the liquidity pools, liquidity pool provision. And some of that we're still figuring out, which is why we have governance tokens. And I don't want to speak about any specific DeFi lending protocol, but, we're still in the infancy of all this. As, David was saying, we're still early. We're still very, very early.
Yeah.
Yes, Olga?
No,
Please?
yes, I want to piggyback on that because we are still very early, right? And I mean, you really also get to know this when you work with a lot of these protocols and developer teams who are building, as you do here in a layer one, right? Because a lot of them are also very worried about what this new regulation that is emerging, what it will do and what it will mean for them, right? Because there's so many points here in terms of AML and KYC regulations or consumer protection or data protection, and a big one that we are focusing a lot on is having your smart contracts audited in a proper way because I mean they are, as David mentioned here before, a very essential part of the decentralized finance aspect, the P2P lending platform. And they must be audited to ensure that they function as intended, right? And that you do not contain any vulnerabilities that could be exploited by hackers. And a lot of these regulatory bodies that are looking into it, they probably also will eventually require platforms to conduct regular smart contracts audit to ensure their security, right? And this is important. It's very important because if that doesn't happen, and now as Jonathan just said, I'm not here to mention any names as well, but we have seen examples of some of these decentralized networks where there hasn't been enough security, right? And there has been smart contract exploits and hacks, and it has resulted in a lot of people investors not being protected properly, losing their funds, having a bad experience in this space. And then we lose them, right? Because they come in, they burn themselves, and then they leave again, right? But everyone keeps forgetting that we are still very young, and sometimes when the market cap of the industry is 3 times higher than it is right now, and there's a lot of hype and everything, people forget that this technology has actually not been around for a very long time, right? So I definitely agree with that. That's a very good point.
I want to ask now to David, because it's a really interesting point, Olga. Yes, security matters. I'm the one in this industry to constantly talk about it, because when I see that some people are just focused on the, let's say, technical performance, TPS and so on, and saying, okay, we can sacrifice a bit security to improve the performance. No, security is a real topic, and we have not only to think about securing people who want to join in a legal point of view or a technical point of view, but also to protect the one already inside, because if we rinse everybody, our ecosystem will not last. David, you started to talk about a really important point for me, inclusivity. and real one. It's one of the few vision values that guide what we aim to do with Web3 Stronger Together, bringing this innovation to each one, everyone, everywhere, and not to let people again on the side of this journey. What should we do to, one more time, it's not financial advice, but how can we create the context, maybe with regulation, cooperation with regulators, institutional actors? How can we use this innovation to improve the life of each one and everyone concretely? How can we realize this inclusivity?
No, I think it's a good question, Laurent. And I think it's, we have to look back at where this all started, right? So this Web3 blockchain revolution or evolution started in the financial crisis of 2007, trying to get some transparency. And we have to remember where we were at that time when banks were failing and being bailed out by governments with taxpayers' dollars. And the whole system was on the brink of collapsing, right? So I think on the one hand, we have to accept that whilst the financial system we have now works and it has developed over time, there is still risk there, and that was proved in 2007. And the whole point of it was to create transparency, make it more inclusive, and then we still had this issue of a significant number of people. In the world, a significant percentage don't have access to financial services, right? So can't borrow and then can't invest. They're not going to be part of the wealth that's being created. And I'm very proud of what's happened in Web3, where some people came out of the shadows with some code and created a system that started with Bitcoin and has now extended to a number of protocols, including Holger's. Which are now capable of providing financial, I won't say financial services, but providing services that can allow people to have peer-to-peer lending. Have made a lot of people have access to opportunities they haven't had before, and I think that is very positive. But I do accept, and I think DeFi in 2021 was something none of us saw coming. Neither did we see NFTs. I think both of those two things, we're only beginning to see the potential. And I think now you're having a lot of financial institutions looking at DeFi, looking at smart contract lending, and wanting to get involved in it. Now, I think one of the things we mustn't do is build the bias that's associated with some of the current system into the new system, right? So if you build the bias into the algorithm, then you're going to have the same result, right? And I think that's the only danger of smart contract lending. Let's face it, one of the characteristics of DeFi 1 is over collateralized, right? So you had a position in DeFi 1 where you had to put down more money than you were borrowing, right? So there was relatively no risk according to the lending. DeFi 2.0 has a stronger connection with the communities, but also a stronger connection to financial systems. And what we've got to watch is as we start evolving from DeFi 1.0 to DeFi 2.0 to DeFi 3.0 in the future, is that we don't just make it another product of the financial system, and we don't build the bias into the protocols. I think that's important. I come from a telecoms background. I mean, what we've seen is the democratization of connectivity, not the full democratization, but you've got 6.1 billion people with a smartphone now that can access services. You're starting to see Web3 and crypto, being adopted as currencies in some of the biggest developing countries in the world. So we're seeing that from a connectivity and an access side, it's there. If we can match that with the Web3 financial products to equal that, then I think we could make some progress.
Yeah.
Thanks, David. Yes, Olga?
Yeah, just quickly, because I think there's a lot of important truth to that, right? I mean, we are a lot of the regulation that also goes on right now in the EU around the AI system that is being operated here. It focuses a lot on the ethical and the bias that is happening, right? When it's being trained on specific data that feeds into these models, right? And I think on here what David said, I mean, this is one of the reasons I'm here in this industry, right? Because when we talk about P2P lending and decentralized credit, we're also talking about, just to bring in, because we haven't talked a lot about blockchain yet, but to bring in this self-executing code on a blockchain, right, that facilitates these transactions by automating the processes of borrowing and lending, right? So, I mean, you are removing a lot of potential bias, you are removing a lot of ethical issues also. But then, but then you need to keep in mind that it can facilitate a lot of important stuff. But then that is where regulation also comes in, right? To make sure that then everything is being regulated, because it is still self-executed code, right? And when you then go into, I mean, how exactly it works in terms of a borrower requesting a loan, and then the collateral is locked in a smart contract, and then you have a lender that funds the loan, and then the smart contracts execute on the loan, and then you have various repayment and collateral releases depending on how exactly the specific platform works. I think that there's a lot of this where you are actually protected as an investor, where you are leaving out current bias and current ethical issues that you have in the more traditional way of doing it, right? So I think that is in a way a good way to sort of propose how you protect the investor, how you attract a small retail investor as well, because they are protected in a different way, right? And I think this is our job to sort of make them understand how exactly that works, because that is the difficult part, right?
Yeah, I often say we shouldn't wait for the regulators coming to solve our problem. We could also finding a way to auto-regulate ourselves and improving. What is your point of view, Jonathan?
Yeah, I mean, I think we have to be better angels. As David was saying, the old system is really, really broken. You know, I'm not going to admit how old I was when I found this fact, but women in the United States didn't have like bank accounts until like the 70s. That's terrifying. Like, what?
Yeah. It's a reality.
Yeah, and so and I was just while I have problems with this bank, I just saw one of their adverts in London, and it said, and it was aimed at domestic abuse. It was saying, you know, if he controls your finances, he controls you. And I was like, wow, that, you know, at least you're taking a proactive approach. But that's what we have to do. We have to be very, very proactive. We have to let people have this access to these systems at different levels. If you're clearly an OG and you know what DeFi is, you know, maybe you do have a little bit more access to some of the higher, riskier, less collateralized opportunities. But if you're a newbie, if you've just created your MetaMask wallet and you're logging in right now, you know, maybe you shouldn't be able to have the highly troublesome DeFi products that we have on the market. I don't know. But I do think that this is a broader conversation that people smarter than me need to have. And I think that if we go with it with the understanding that we need to be less racist, less sexist, less bigoted, less, you know, bad, I think we'll get better results. I think if we just focus on, hey, is this person likely to pay back their loan? Or does this, you know, deal or platform makes sense, we'll start kind of unraveling a lot of the fabric to this entire world of ours.
I agree totally. I think, so, sorry, Laurent,
yeah,
I just wanted to
no,
comment.
no.
I think there's two key points, right? One of them is the UI, UX experience to access DeFi needs to also be democratized. It needs to be something that my grandmother, my mother, you know, people who aren't coders, you know, can access. And I think that is one of the biggest barriers to the adoption of DeFi going forward. I think, and if the only way to access it is going to be through traditional financial institutions or the known actors, then they will have a say, and you will have the same results. I think the second thing is to look at the sort of qualification, right? So a lot of people are excluded from certain types of financial products because of credit scoring and other things, right? Are we going to reimagine that? So we reimagine the product. Can we reimagine that so the people who are in countries who don't have the same credentials as we would in Europe and the US, can use the credentials they have to access DeFi? And I think if we look at those two things, UI, UX, the way to access it via applications, and also the qualification side, and that will give a massive bolt of lightning to the adoption of DeFi.
A really interesting statement. Jonathan, you want to add something?
Yeah, no, David's spot on. Like if you could start with, and we've looked at this before, if you could start just verifying someone's education level, right? That means they're more likely to understand, how loans work, how the mathematics behind this works, whether their, university degree or their uni is license or whatever is on chain. That's where we start getting into this weird world of self sovereign identity and probably building a system that allows for us to do loans and make investments, whether those are real investments or other types of investments in developing economies. And for people like that who have not had access to even traditional banking, to then be given access to say, hey, I need to go, I don't know, start a small sheep farm in the middle of whatever country, and I've put my proposal up there. There was this, and still is. There's a program called Kiva, where you donate money and they pay it back, but you don't get the money back. It's very charitable. But those types of opportunities alone are enough to change economies. They're enough to change empires even, and that's where I think we get into really interesting solutions where people who have been locked out of their current centralized economy, their centralized lending or banking system, they get to come to us, whether it's the use of Bitcoin or it's the use of these DeFi lending protocols, or it's possibly some sort of crowdfunding that's legally permitted. That's just incredibly exciting to me. That gives a lot of people a lot more opportunity and hopefully reduces suicide rates, violence, all these other kind of terrible things in the world.
Yeah,
Yeah.
I want to. Yeah. Olga, go on. Sorry.
No, yeah, it's just I thought there was actually mentioned some pretty interesting things here with self-sovereign ID, etc. And that's not a topic we have touched upon yet, right? Because we need to remember that this is all about decentralization, trustlessness, bringing a lot of the power back to the people, right? And one of the core principles of the industry, the blockchain technology, is decentralization, right? You have no central authority controlling the network. It creates a more trustless environment, which can be very attractive if you are interested in creating systems that are fair and transparent, right? And then when you talk about this self-sovereign ID as well, Jonathan, right now there's a lot of AML and KYC regulations that should also adhere to these DeFi and P2P lending platforms, right? That they must comply with to prevent money laundering and other fraudulent activities, right? And you need to be able to verify the identity of these users, monitor the transaction if illicit activity happens, and defining and developing this whole system around that, where you are still operating completely privacy-centric, where you are anonymous, but you have the opportunity to be de-anonymized by the platform you operate in if you actually do anything illegal. I think that's a very big step towards this, right? And this also provides this investor protection aspect that the Security and Exchange Commission and Gary Gensler focuses a lot on. I know they are really doing some heavy hits right now, right? And they're sort of doing the opposite towards what marketing crypto assets in the European Union is trying to do. But there's a lot of focus around this, right? And where I work at Concordium as a layer one, it's very focused on this identity mechanism, being regulation ready, right? And this is also where, when you talk about self-sovereign IDs, being able to hold your own identity in your own wallet, and then by the use of zero knowledge proofs when you are interacting with decentralized applications, you then verify specific information such as your age to access a platform, or if you are from a specific country. And then you verify this information, but you don't reveal it or store it anywhere, right? Which is also a big problem in terms of data security, etc. And I mean, in my point of view, zero knowledge proof self-sovereign identity, being the owner of your own data, I think that could be for blockchain and mass adoption what ChatGPT just was for the AI industry as well, right? I mean, we are moving into some interesting features here. Yeah.
Yeah. Thank you, Olga. David, let's explore a bit mass adoption. You started, Olga, I highlighted this importance of decentralized ID. You started to talk about, and thanks to you, to talk about UI, UX. I often say, guys, in Web3, we have really talented people, genius, okay? You are able to create really crazy, innovating stuff. Why don't you spend some time to improve the user experience? Please, let's try to make a simplification big bang, because even if you are in since a long time, and I DeFi a lot, I time to time, it's something you swear, you are not sure, David, what is your point of view? How can we really help everyone to at least make a try to discover, to experiment?
Yeah, so I think number one, the product needs to be good, right? So is the DeFi product competitive with other products out there? Now, there's one macroeconomic factor that's made it less attractive, which is interest rates going up, right? So as interest rates have gone up, people who are used to the current system can put money into risk-free assets like government bonds or deposit accounts, and they can get an interest rate which is, more competitive with the DeFi rates. So I think that makes DeFi less attractive than it was before, when we had in reality negative interest rates. So I think there's one thing is that it's nice to have the smart contracts and technology, but ultimately for a product to be successful, the incentive needs to be there for people to adopt it, right? So I think we need what we don't do enough in Web3 is think about the business, right? So we need business people like Jonathan and these guys in here making the product attractive. I think the second thing is access. We've discussed that already. I believe one of the key points of access will be the smartphone. 6.1 billion people. Let's get DeFi applications on the smartphone, which are one click, like Apple, very easy to use, very intuitive, that people of all technology literacy levels can access. I think the other thing is the qualification. So let's not, let's not design access to DeFi in a way that excludes anyone who's not in Europe or America or has a credit score, etc. And I think for that, just going back to the points that Holger made on KYC and AML. Actually, why do you need KYC on AML, right? You need it because you have people coming off the street, going online, and basically committing fraudulent things. And it's actually more relevant for non-crypto financial products than it is for crypto financial products. If you have a digital identity and you have a history of transacting with that digital identity, you actually have more information on the person. You can be more confident of that person and their activities than you ever could with traditional KYC and AML, right? So for me, exactly. I think digital identity and online Web3 activity is more powerful than any AML or KYC. So I think we need to rethink that, right? And I think we can, as Web3, make a stronger case that we can be more powerful with DIDs and verifiable credentials than we ever could. But that's my thing, and I think that is the road to mass adoption. I think the move from DeFi 1.0 to DeFi 2.0, which is integration with the financial systems, is sensible, right? More B2B, more focus on communities, moving to DAOs. I think that's all very, very good, but it's very techy. And one of the criticisms I have of our community is that we talk too much about technology and protocols, right? Nobody gives a damn, right? What they actually care about is being able to easily download something to their smartphone and get a higher interest or more competitive access to funds than they can elsewhere. And that's what we need to focus on, more business people.
Exactly. And I mean, and this is a conversation I usually have a lot of this in this space, right? When you speak to people who aren't focusing on blockchain technology, who aren't familiar with Web3, they usually ask me, but it's so complicated, right? We don't understand all this talk about protocols and scalability and decentralization and security. It just sounds too complex, right? And then I always ask them, but I mean, this is all something that functions and works in the backend, right? So it's all about improving, as you say, Dave, the UI, the UX, the front end. So people, they don't need to know that they sometimes are interacting with blockchain technology, right? It just needs to work. And this, because it's the same when you talk to people and ask them, do you know how the internet functions, right? No one knows how the internet functions, but everyone knows how the applications that's built on top of it functions, because that's the ones we interact with, right?
Good point.
But it's true that there is a narrative here in this industry where we maybe are speaking a little bit too much about the backend instead of focusing on developing a united front end, because that is what eventually will lead to mass adoption. And I like that. That is very true.
I do agree. It's in my point of view too often focus on this crazy, never-ending technical race. I think we should also at least simultaneously start to calm down and really think about real use case and user, and not constantly trying to improve what works already and what could really improve the daily life of everyone. Jonathan, mass adoption, compliance,
mass
regulation.
I think the more people we get involved and the more people we explain what we're trying to do, what our ethos is, what our motto or creed is for all of this, I think we'll get more and more mass adoption. I think when people start seeing that they're safer, that their data is safer, that their information is safer, that their finances are safer, that their transactional data, whether that's financial or just uncategorized data, is better here than it is in Web 2. And I think that we do have to get to this Web 2.5 mid-fi, as I've been calling it, kind of solution of, I'm above 18, I'm above 21, you may know that I'm an accredited investor, or these different types of opportunities to allow for development. I think that's what's going to slowly start kind of expanding it as well. I think when we start making systems easier that are in the traditional world really, really hard, it brings in more people. What happened, what my journey real quick into this world was people were calling me about ICOs and Howey letters and all this other kind of stuff. And then I had a client who basically said, how would securities work on a blockchain then? And that's what blew my mind, because there's so many parties and dealing with securities, from transfer agents to broker dealers to exchanges. And all of those people have to take a cut. All of those people have their own systems. All of those people have their own problems. And in a lot of ways, they've shut out arguably more than half the world. And I think if we change that, if we build better systems, if we try to be more inclusive and we try to make things easier for all of us, and so that you don't need to be a native crypto user to understand, hey, I'm going to put my money in this thing and it's going to give me, I don't know, a respectable yield. But I know that it may be, I have a risk category. I'm willing to risk it all. I'm willing to risk half of it, kind of thing. But some of this is, just educational based. And I think the industry, especially in this winter session we're having, is really trying to become better with educational information. And I think that's really important. I know you don't have to know how the blockchain works, but just understanding what we're doing and how we're trying to do it gives people a little bit more excitement and solace that, we're not trying to be the bad actors. We're not trying to be the FTXs to throw anybody under the bus. Like, we are trying to build better systems. There's still, and there will always be greed. We are just monkeys in clothes. But I think if we can continue with that narrative, we'll be better stewards of this planet. We'll be better stewards of our fellow man and woman.
Yeah. And it also feels like we have a lot of the building blocks out there, right? We just haven't found a proper way to put them together, because I mean, if we just now talked about usability, right, and alleviating a service back in Web 2 that could be easier, more usable, more attractable in Web 3. I feel like when we're talking about lending, right, and we're talking about decentralized credit, that is actually an area where I see a huge future. But we still need to before we actually get mass adoption, as we've been talking about, we need to have the regulation in order. We need to have the consumer protection in order. We need to have the data protection in order, right? And then after that happens, talking about lending protocol built on top of a blockchain that operates through smart contracts, it's easy to imagine a front end where depositing assets is easy, issuing loans is easy, repaying these loans are easy, earning interest is easy, and then various governance aspects towards it. I mean, it's easy to picture, right? But we have the building blocks. We're just not quite there yet. But we're getting there.
Thanks a lot, guys. It has been really captivating. I learned a lot. It's what I love in Web3, to meet different point of view, different people like you. You bring a valuable contribution. Thank you again. It's time to close this debate. See you soon. And I'm sure we will have a next time a chance to continue to discuss like this, and let's keep building together. It was a pleasure. Bye bye, guys.
Thank you, guys.
Thank you.
Very nice
Bye.
meeting everyone.